Jim Cramer joins me on the floor of the NYSE. I'm Catherine Ross with TheStreet. Jim, let's start off with the news of the day, which is this JPMorgan cryptocurrency.
Yeah, well, rearguard action, they should have done it a year ago. Remember, Goldman discontinued. They were going to do it big. And I think the crypto, I had a cybersecurity expert on, Bob Herjavec. He's a really Shark Tank guy. And I think that when, what happened is when someone died recently who had all the passwords to a big crypto account and took the passwords with him, we realized that this is no longer a currency. And that was what makes me realize that as much as people want it, it's unfathomable that because somebody died, that's like having a skyscraper with no way for the firefighters to get up. There's no key, there's nothing. So Bob said that on our show, and I just feel like that this is, let's say that it's not the most, it's not necessarily the smartest thing I've heard them do, and I happen to go the other side, which is I really like the Mike Mayo piece this morning from Wells saying buy JPMorgan ahead of the end of February analyst meeting, and that could be a catalyst, and I think that we own it for action alerts, and I just feel great about JPMorgan. I know it's been long term, but we feel great, and I think it's a buy.
Let's talk about a stock that you don't necessarily feel great about, and that's Nvidia.
Remember, I switched. Everest was Nvidia, and then I took Nvidia. I changed his name after teaching, where someone asked me, why did you sell your Nvidia? I said, because I'm going to miss the quarter. Well, then they missed the next quarter, and Nvidia, now people just want to get a jump. They feel like there's just no way that the company could possibly say anything worse than they already had. I get that, and it's entirely possible. Jensen Huang is a genius. My youngest dog, Xilinx, is breaking out here. And I had a lot of problems with Xilinx last night. Xilinx, I was really interested in what Xilinx did. I left a red pen out, and he ate it. So we came back, and we thought he was bleeding, and there was blood all over the floor, but no, he ate a pen. Kidneys.
Speaking of dogs, you just came off the CNBC set and you were talking to the West. Yeah.
King was there, and King and his handler, and I could tell that his handler wasn't as close to the stock market as I am, because I was choosing to speak about the greatest pet health company of our generation, which is Zoetis, which was spun off by Pfizer. Reported a monster good quarter. The stock's up 4. He was more, the handler was more concerned, I think, with the need to give King a shave after the big win. And I was thinking that I was going to give, after that interview, which I regard as being suboptimal, I do believe that it's time to order King a subscription to the Dollar Shave Club.
Would definitely help with that beard of his.
Yeah, definitely. We got to talk retail sales for a second.
Yeah, let's talk retail sales.
All right, so the market's down because of old data. Now, I think that what people have to understand, I took a lot of heat, even from people on my own network, by saying that Jerome Powell wasn't doing the homework. And, I took a lot of hard classes in my life. I was a pretty good student. And periodically, I would be called on the carpet by a professor who said, I had Professor Edward C. Banfield at Harvard. And one time he said I hadn't done my homework. And my reaction was not to say, no, I did. It was like, wow, okay, Professor Banfield said, you can Google him. Said I didn't do my homework. Maybe I didn't do my homework. It's okay. The stuff, Jay was new. He didn't seem to have the panoply of people that I have to talk to in order to build my mosaic of my worldview. And he was wrong, but he got it right. And so it's past tense. And now we're okay. So people who are selling it on stuff that was before Powell knew how to do the homework. And what's a shame is that a lot of people feel like I'm going to go use this Banfield analogy. Again, you can Google him. I had a Summa on my generals. It's not easy to get a Summa. And he upbraided me that I hadn't done my work. And I want to say, listen, I was like, Summa my generals. He didn't care. Well, Jay may have had Summa on the generals, but he didn't get it right. Sorry. I'm sorry to be so adamant about it because I took so much heat. And it was because post-Black Friday, brick and mortar retail was really, really bad, and you're seeing a lot of stores now closing. Even look at Tanger Factory Outlet was bad. In other words, even the outlets were bad. Amazon was good. We're not getting a good read from these numbers. They're not. They have to go to Adobe and have to go to places like Shopify to build a real spreadsheet about retail sales, and they don't do that. But I understand the propensity to want to sell. A lot of my best technicians say sell here. I get that.
What about the government shutdown? Did that have any effect?
Absolutely. Government shutdown, stress in Washington. But the thing that really wrecked the economy was that when we heard Jay Powell say he may have to overshoot in terms of rate hikes, that was it. That was, I called it a reckless comment. It was reckless. And fortunately, we have some industries that some cycles have been able to override that. The aerospace cycle is very, very strong. The truck cycle, not the, for the passenger truck, not the big cycle, because those were terrible, Class 8. Those two cycles were okay. The housing cycle took a real hit, very, very bad. We had bad Home Depot, bad Lowe's. Those are coming back, by the way. And I added Home Depot to the yesterday to the bullpen. I urge people who are watching, you should go watch. We spent a lot of time. That was a 73-minute lecture that Jeff and I gave, and I urge people to watch it. But it's past, but the market's going to go down on it because that's what the market does. The market is not that smart. I mean, I'm not a genius, but the market, I can recognize when it hasn't done its homework.
Let's talk. It's Valentine's Day, so I want to do a Valentine's Day.
I got the wife some nice. I always get her flowers from Seaport. They're always well received. They're beautiful today. Beautiful bouquet.
What are 5 stocks that you want to love on Valentine's Day?
Okay. Aside from the, I tend to think of apparel, but then when I saw the jeans deal fall yesterday when Levi's did, I said, well, I got to be careful of that. I am going to love FANG. I'm going to love FANG because FANG's going to go down in the next 6 weeks, and you're going to have to show love to FANG. And why is FANG going to go down? Because we're going to have a plethora of IPOs that's going to soak up all the money out there, and that's because, remember, there's been a big distribution from active managers who can buy IPOs to passive managers who can't. So these deals will fall flat, and so the money that is going to be needed to buy Uber stock and buy Lyft stock, the money that's going to be needed to buy Palantir stock and buy Airbnb is going to come out of FANG. So you're going to have to FANG's going to be forlorn. This is the FANG. And just have the money to be able to deal with the fact that that they're going to be source of funds for these IPOs, and we're going to hang in with them. But it's FANG, all
and
5.
You mentioned that on your Action Alerts Plus call yesterday.
It's just I wanted to flesh that a little more because it's a radical amount of merchandise coming to the tape. But more importantly, the people really misjudging who has the money, and remember, if this thing's not in the S&P, then the Vanguard S&P index fund's not going to buy it. You can't. And when you look at the holdings, who owns stock these days, usually the top 25% of shareholders are index funds. So index funds won't be able to buy the IPOs. So that the active managers that are left who can are going to sell FANG, and that's what you got to be ready for. Look at it. Remember, these will be, I talked about this extensively on our call yesterday, these will be damaged stocks, not damaged companies. But be ready. And again, I can't emphasize enough that I will say this point blank, since I used to be a salesperson. I spent so much time on those 12 conference calls a year, I would buy that, and I wouldn't even take the product for the price I'm giving you. I'm not kidding. I mean, I used to sell my stuff when I was at Goldman. And it's like, this is a product that I'm putting far more work in than I did when I was at Goldman. I gotta be careful. It's become all consuming. Those calls are all consuming. JPMorgan down $1. It's a bad day.
And if you missed his call yesterday, you can go to actionalertsplus.com and watch the replay. Now I want to switch over to earnings from this morning, and one of the biggest ones is Coca-Cola.
Well, look, Coca-Cola, they had +4, they actually +5 organic. And price mix was the large thing for the 4. But here's what's the problem. James Quincy, he really gave you a very suboptimal forecast. I use Bonnie Herzog, have for, 30 years, Wells, and she's the best today. And she said it was a sizable miss in the forecast. Now, James has now lowered expectations to the point where I think tomorrow you can buy it. You can't buy it today because what happens is you're going to get downgrades because it was so shocking to people. They haven't had time to react. You probably get some downgrades later this afternoon. That's one of the reasons why the stock's going down so precipitously. People are trying to get in ahead of the downgrades. I like James very much. I'm a little mystified. Call me mystified. but PepsiCo reports tomorrow, so maybe we'll learn more. The diet is stabilized. Coke Zero is doing incredibly well, growing double digits. Water, okay. Plant-based, not that good. But what I would come out and just say is the forecast didn't jive with the actual. And I'm doing a lot of work. Apparently very weak conference call. I haven't had a chance to be on it. I was on the Cisco conference call, and that was the opposite, but we've got to save that for the action alerts. So Coca-Cola down $3.36 is not attractive to me. I want to see, when you see a stock down like that much after a conference call in the morning, that means that there will be big analysts who will downgrade it, and these accounts are trying to get ahead of that.
And to look forward, let's talk about Canopy Growth for a minute, which reports after the bell today.
Yeah, I still think this is an investment. Canopy's got a very difficult situation. Kronos does not have this power. It's one of the reasons why people like Kronos a little bit more. Canopy has $4 billion to spend in order to dominate, so they're going to spend. I mean, they've got a great balance sheet. They want to win. They want to beat Coca-Cola. Okay, they think they can be Coca-Cola cannabis. So you can imagine what you have to do is wipe out everybody. PepsiCo is able to stay alive somehow. But I think that we have to recognize that he wants world domination. I am not kidding. This Bruce Lynn, he came to one of our conferences. He was just magnificent discussion of cannabis. But I do believe that you have to recognize that he's in spend mode, not in harvest mode. And what you'll be looking for is how much share does he have? Anything north of 33% share in Canada is very good. By the way, you'll see one of the things that Shopify, a terrific Canadian outfit, is selling a lot of cannabis. And that's been the channel that people have been selling it online. Kind of interesting. Can't get it here.
All right, and just so everyone knows, real money stock of the day is Nvidia, and we'll be covering it in a live blog, and I'll be live tweeting it after the bell today when it releases earnings.
Jensen Huang, and Jensen Huang went to Oregon State. My daughter lives in Oregon, and very proud of him. Everyone's proud of Jensen. He's a really remarkable guy, and they got hurt. And just so people understand what happened in Nvidia, right? A couple things happened, but they produced these really high-end cards, graphical user interface cards, and they didn't know how many of them would you needed them for gaming, but you could also use them for crypto mining. And so they didn't have a handle of what people were using them for, so they tended to end up being used for crypto mining, and then they were returned. And so there turned out to be a gigantic inventory built in the system. They also didn't have that great a data center. And then they have a new chip, the Turing, which is so much more sophisticated than the current chips that the game writers, the Grand Theft Auto people, the Hausers, Rockstar, they're not writing for it yet. So they've got a product transition. They had a slowing in the data center. Chinese gaming slowed down. We don't really have the autonomous driving breakout that we thought. So it's analogous, harmless, but people are saying, in Jensen we trust. I totally get that. Jensen's remarkable, but I want to see the number, but people don't want to wait.
All right, let's head over to Action Alerts Plus so we can talk about Cisco.
Yeah, and Home Depot. I want to mention Home Depot. That was a bullpen name.
Perfect, then let's talk about Home Depot too. So you guys can find us on actionalertsplus.com. We'll see you tomorrow.